Hey everyone, welcome back to the Finmineering channel. Today we're diving into Greatland Resources, listed on the Australian Stock Exchange with ticker GGP. It's a junior explorer that recently turned into a cash gushing machine following the acquisition of Newmont's Telfer Mine. In under a year, they've taken the savvy Newmont acquisition and turned it into cumulative cash flows of over $1 billion Australian dollars. The latest quarterly estimate, issued recently in January, is forecasting the cash pile to grow to almost $1 billion Australian dollars. And the company is debt free. With gold prices being as high as they are, this could be a serious contender for being a big play in the coming year. Now, let's break it down. First, let's start with the transformation story. Back in 2018, Greatland discovered the Havieron deposit in the Pattinson region of Western Australia. It appeared to be one of the highest grade copper gold deposits found in Australia in recent history. Fast forward to 2024 and they snag 100% ownership of the Telfer Mine following a divestment from Newmont. The Telfer Mine is a historic beast, having produced over 15 million ounces of gold since 1977. The acquisition of Telfer also included full control of the Havieron deposit for a total consideration of approximately 700 million Australian dollars. The upfront cost was about $540 million and contingency costs up to $100 million US dollars. It seems like a really smart move considering that Telfer has got existing infrastructure and Havieron would be processed at the Telfer mine, setting it up as a hub and spoke operation. Check out these shots for Telfer. It's an absolutely massive operation, and it's got one of the biggest gold processing facilities in Australia. Integration following the acquisition was seamless, given it's effectively a one operation show at the moment until the Havieron deposit gets underway. Safety metrics have improved, with TRIFR down to 6.5. TRIFR stands for Total Recordable Injury Frequency Rate. Key operating leases around Telfer have been renewed to 2045, de-risking operation. And the payback for the acquisition? Well, it was lightning fast. It was paid off within months. It's absolutely phenomenal. Let's look at the operational aspects of Telfer at the moment. In just 7 months of ownership in FY25, the asset produced almost 200,000 ounces of gold at a relatively low all-in sustaining cost of $1,850 per ounce, which beat guidance. In the September quarter of FY26, the asset produced 81,000 ounces of gold at record high recoveries of over 88%. If we look at it on a quarterly basis since March, we can see that production has seemed relatively stable, which is really what we'd expect from an asset like Telfer that's been in operation for a long time already. It also supports the point around seamless integration. All-in sustaining cost over the period shown is fluctuating a bit, but the overall trend is not creeping up. Looking at cash flow from the March to September quarters, we can see a massive cash flow from operations of over $900 million, cash flow before growth capital spending of also $900 million, noting that there was a $62 million equity raise in the June quarter. Growth capital spending over the period is almost $160 million, with the majority of that being spent at the Telfer mine. Effectively, Greatland is really investing in the asset to try and breathe some new life into it following Newmont ownership. As mentioned before, the company is debt-free. Exploration spending is ramping up big time, having spent almost $24 million over the period shown. They're drilling like absolutely crazy, and it's a good sign because they're trying to breathe new life into the Telfer asset, extending its operational life. They've drilled almost 240,000 meters this year, which is massively up from previous periods. But the real excitement, well, that's in Havieron. Their December 2025 feasibility study just dropped, and it's looking pretty good. Reserves jumped to just over 3 million ounces of gold and 130,000 tons of copper. Life of mine estimate at this stage is around 17 years, with steady state production of over 260,000 ounces, according to the study. Now, of course, a lot of water still has to go under the bridge with these findings in the study, but it's looking pretty good at the moment. Pre-production capex is estimated to be just over 1 billion Australian dollars, and at this stage, it looks like it could be self-funded from the company's existing cash pile. NPV is shown as $2.9 billion at a gold price of $4,500 Australian, and first ore is expected about 3 years after the final investment decision has been made. As mentioned before, the ore would be processed at Telfer, so that takes away a huge chunk of operational risk in developing processing facilities. Now, of course, no mining story is risk-free. Guidance factors in lower grades from stockpiles, which is pushing up all-in sustaining cost in the near term. CapEx is heavy, $230 to $260 million at just Telfer, and around $60 to $70 million at Havieron pre-financial investment decision. Exploration is key for extensions, but there are no guarantees, of course. However, with almost $1 billion in cash reserves, the company's sitting pretty. So is Greatland your next gold winner? Trading at over $12.60 at the time of recording, it's over 8% higher than the previous update. Of course, no one knows how a rock will break, but I'm liking the look of this one so far. If you like this video, please hit the like and subscribe button for more mining breakdowns like this. Thanks for watching, and until next time, see ya.